promising to take on more policies the insurance companies committing to California and what this means for homeowners. A new law banning officers from covering their faces.
It's a new construct conceived to terrorize our diverse communities, to instill fear and chaos.
The state's response after immigration raids in Los Angeles.
The state of California has no jurisdiction over federal agencies.
What U.S. Attorney Bill Essayli directed federal officers to do. Electric vehicle tax breaks expiring soon. The impact to your wallet.
Thank you for joining us for California Politics 360. I'm Ashley Zavala. Governor Gavin Newsom announced this week that a handful of insurance companies will come back or continue writing homeowners policies in California. It comes as families have been grappling with high insurance costs, losing coverage altogether, or forced to use the California Fair Plan, which is the state's insurance of last resort. The insurance crisis magnified when 3 of the largest companies paused or stopped writing policies. In 2021, Allstate quietly paused new policies. In May of 2023, State Farm made a similar move. A year later, they did not renew 30,000 existing policies, leaving families in limbo. And Farmers Insurance began limiting new policies in July of 2023. The California Department of Insurance said those 3 companies accounted for nearly half of all the policies written in the state. And they were not alone. A total of 7 of the 12 largest insurance companies by market share either paused or restricted new policies in California during this time. Since then, state leaders worked to change state insurance regulations to lure those companies back. Those regulations took effect late last year. The new rules allow insurance companies to consider new factors when they set premiums. That includes the likelihood of a catastrophe and the cost companies pay to insure themselves. In exchange, the companies have promised to provide more coverage in high wildfire risk parts of California.
The reforms we've just put into place allow for more rapid rate increases. And that's the pressure point now as we move from about average to below average in our rates. We're now starting to see those tick up, but the benefit of that now, part of the strategy, is a requirement to come into California market and also to insure in what we refer to as the WUI, which is the Wildland Urban Interface, and to cover 85% of the WUI in return for those rate increases.
California Insurance Commissioner Ricardo Lara joins us now from Los Angeles. Mr. Commissioner, thank you for making time.
Thank you. It's good to be here.
We know 5 companies have now committed to California. Has there been any progress with others, especially those major insurers like Allstate, State Farm, and Farmers?
Yeah, we're absolutely talking to all of them. Stay tuned. We expect more to file rate files under the new sustainable insurance strategy of ours. So we're continually having these conversations. So we expect more in the next coming weeks and months.
Is there a timeline or a goal for that? I know you were expecting some stability in 2026.
Yeah, I mean, we're seeing already, the market respond. Even as we were setting up already the implementation of sustainability, we started to see markets already coming back. Now you're really starting to see insurance companies, like you said, 5 already coming back, opening new lines, expanding in California. It all depends. These ongoing conversations, different companies have different footprints, different types of businesses in the state. So, we're having these conversations now. The important thing is our sustainable insurance strategy is done. We're implementing it, and we're having these fruitful discussions with the companies. So they recognize that we've done the hard work, we've made the tough decisions, and now we're entering these conversations. And you're going to see more companies entering the state.
Your department has noted the 5 companies that are prepared to stay in the state with those new rules. They're asking for a 6.9% increase. The governor mentioned earlier this week these new regulations will allow for, in his words, more rapid rate increases. Is that how you would characterize what could happen to insurance bills for Californians?
Oh, well, these rate files are still going to have to be reviewed. They have to go through our transparent process. They need to be accurately, reviewed. They need to be looked at by our attorneys, by our actuaries, to be determined if that is going to be the actual final rate. But what's different now is that these rates under our new system, unlike before, they have to commit to write and stay in the state and commit to writing where they once used to abandon and non-renew people. That is the new part of our strategy. And it is the only agreement that exists in California and the first of its kind that no other state has. And that is the beauty about our reform, that they can no longer just abandon these communities. They have to commit to stay and grow in the state and go back into the communities that they once abandoned under the new rules.
But with the new rules and the new system, what will the California Department of Insurance do to protect consumers and to prevent private insurance from becoming unaffordable or from putting people in a situation where they're still relying on the FAIR plan because it's so expensive?
Absolutely. And this is the other part of our sustainable insurance strategy. Hand in hand with these rate files, the insurance companies not only commit to writing more in the wildfire distressed areas, but they also at the same time have to depopulate the FAIR plan. They have to get homes out of the FAIR plan, offer them traditional insurance. That is the agreement under our new rules. Because we don't want a growing FAIR plan, we want those homes out of there as well. And then additionally, for the first time, mitigation is gonna also be reflected in the new rate files. So that's also gonna be taken into consideration, because I heard time and time again from consumers, I'm spending thousands of dollars and my rate is still going up. It's not being considered into my bill. So that is also going to happen for the first time under these new rules. So not only are insurers committing to stay in California and grow, they can no longer abandon our communities that have been ravaged by wildfire, but mitigation is going to be taken into account now into the rate, and they have to depopulate the FAIR plan. That is the unique part of our plan that never existed before, and that is unique to California. No other state has this agreement, and this is why we feel that we're going to see, the rates come down and stabilize. We're going to continue to see insurers come into California, and in the long term, we're going to see a rate stabilization for the long term in California and stabilize and get us finally out of this insurance crisis.
Insurance is what you oversee specifically, but I mean, on the topic of mitigation, I know that's one example, but could state lawmakers and the governor do more to help you get companies back and keep prices down in other ways outside of what you oversee?
Absolutely. We've been working this year, for example, on mitigation. So there's a bill right now sitting in the governor's office that will create the first ever mitigation grant program in the country for fire that will give money in people's pocket to work on that wildfire mitigation that not only saves your life and saves your property, but brings the cost of insurance down. That is critical for us to make sure that we're working hand in hand with the legislature to create these programs to get money back in people's homes and in their hand so that they can do the work, so that work can be reflected in their insurance rates and bring that cost down of insurance. And guess what? It also keeps insurers writing in those communities. So it's all interconnected. Well, of course, we're going to continue to work with the governor. Hopefully he signs this bill, and we're going to continue to work with the legislature to provide more resources to work on mitigation that is key to bringing the cost down and keeping insurers writing in California.
All right, Mr. Insurance Commissioner, thank you so much for making time.
Thank you. Appreciate you.
Next on California Politics 360, reaction to a new law banning officers from covering their faces during law enforcement operations.
They've been told to basically disregard the law.
My one-on-one conversation with U.S. Attorney Bill Essayli, his response to concerns brought up by Governor Newsom. California has become the first state to try to ban most officers from covering their faces during law enforcement operations. This includes federal immigration agents. This is in direct response to immigration raids in Los Angeles in early June. Federal agents wore masks while making mass arrests. That prompted days of protests and led President Donald Trump to deploy the National Guard and Marines to the area. Governor Newsom says this is the state pushing back from the practice of unmasked agents detaining people on the streets. But the Trump administration argues immigration agents are facing increasing harassment and that concealing their identities is necessary for the safety of the agents and their families. Edie Lambert breaks down the new law.
Agencies have less than a year to publicly post a policy limiting the use of facial coverings. Under this law, officers will not be allowed to wear neck gaiters, ski masks, and other facial coverings during operations. Officers who violate the law could face charges or lose their qualified immunity. However, there are exceptions. Undercover agents are still allowed to wear masks, and medical masks and tactical gear are allowed. This law applies to local and federal officers, but not state police, the California Highway Patrol. And it's unclear whether the state can enforce the ban on federal agents. The Trump administration says it cannot. While California is the first to enact this ban, lawmakers in several states have introduced similar proposals. That includes Tennessee, Michigan, New York, and Pennsylvania.
U.S. Attorney Bill Essayli, on behalf of the Trump administration, issued a memo to federal officers to ignore this new ban. I had the chance to sit down with him earlier this week. Here's part of our conversation. Joining us now is the U.S. Attorney for the Central District of California, Bill Essayli. Thank you so much for joining California Politics 360 from L.A.
Thanks for having me, Ashley.
So, Mr. U.S. Attorney, first, what action has the federal government taken so far on this proposal?
Well, we've taken no action other than directing our agencies that the state of California has no jurisdiction over federal agencies or regulating federal agents. So they've been told to basically disregard the law. It has no force or effect on the federal government.
The ban is called the No Secret Police Act, with Democratic lawmakers raising concerns that those accused of either immigration or criminal violations don't know who is arresting them, with some instances of officers showing up in unmarked cars, them being masked, them not identifying themselves. I mean, how can people know for sure that it's federal law enforcement when those operations are being conducted?
Well, first of all, if anyone has any questions, what they should do is call 911, and the local police will be able to confirm it. They've got channels to talk to the federal agencies, and they can confirm whether that is in fact ICE or Border Patrol or FBI or ATF. They're in that location. That is the solution. You call 911, you make a report, you do an inquiry. You don't get in their face and try to interfere in a federal operation. But I don't really think that's what it's about, Ashley. I think they know exactly who's doing this. They just don't like it. They don't want our immigration laws being enforced. So they're dehumanizing and they're delegitimizing the federal government. They call ICE agents kidnappers. They're saying they're making people disappear. People are being arrested in compliance with federal law and the Constitution. That has been challenged in court and it has been upheld. And all they're doing with this bill and this rhetoric is putting the lives of our agents in danger. Just this week, you saw agents being shot at in Texas. Unfortunately, detainees were hit and killed in that. That's the type of violence that we're seeing being motivated by the rhetoric coming out of Sacramento.
Just piggybacking off of that, we've heard from you, the Trump administration, over the last couple of months about an increase in federal officer assaults. But I want to play this clip from Governor Gavin Newsom in response to that. Take a listen.
There's an assertion that somehow there is exponential increase in assaults on officers, but they will not provide the data. They will not provide that information. All they've provided is misinformation and misdirection. One agency saying one thing, another agency saying something altogether different. Look at the data sets. They will not provide with transparency that information.
Mr. U.S. Attorney, how do you respond to that? I mean, is the Trump administration being forthcoming with that information?
So I don't know what the governor's talking about. He often peddles in dishonesty. I'll say it nicely. You can just look at my office. Everything we do is a matter of public record. We have filed almost 80 criminal cases for assault or for obstruction of a federal agent. Those are public cases. That's on public record. My office, the federal government, has never filed that number of cases at any one period of time. It's an explosion of assaults and attacks on our agents. So the governor can just look at the record. He can look at the criminal records. He can look at the arrest of his friend, his buddy, Mr. David Huerta, who's the president of the SEIU, who went and deliberately obstructed a search warrant being executed. So you cannot take the governor seriously on that rhetoric.
This proposal takes effect in January. I mean, do you see the courts getting involved, whether that's you, the federal government, or the state filing the first lawsuit that could get judges to decide any of this?
Well, I'm sure the governor will try to file a lawsuit. That's about all he's good at doing, is wasting California taxpayer dollars, tens of millions of dollars that could go to fire aid victims. It could go to homelessness. It could go to a bunch of other things. But he's too preoccupied with attacking the federal government, who's trying to keep the community safe. We're trying to get criminal, illegal aliens out of the community. But the governor and the attorney general, they are just hell-bent on trying to obstruct us. So I'm sure he'll file a lawsuit, and I'm sure he'll lose again, as he did when he tried to do the TRO and the injunction to stop our immigration enforcement. That was reversed by the Supreme Court. So he's welcome to file whatever he wants. He will not be successful. And if he wants to regulate federal activities, he needs to go win a federal election. But he doesn't get to do that from the state of California.
All right. Mr. U.S. Attorney Bill Essayli, we appreciate your time. Thank you so much.
Thank you for having me.
You can watch my full interview with U.S. Attorney Bill Essayli online right now. Well, looking to buy an electric vehicle, the deadline facing buyers to save thousands. Federal tax credits for electric vehicles are expiring soon. California's pledge to revive the tax credits have also stalled. Joining us now is CalMatters climate reporter Alejandro Lasso. Thank you so much for being with us.
Thank you very much for having me.
Yeah, so let's start with the EV market right now. With these credits ending, how exactly will that impact it, and especially for people who are thinking about buying an EV?
Absolutely. Well, if you're thinking about buying an electric car and after the expiration of this tax credit, you should expect a much slower market. People saw this expiration coming. They saw this incentive, which was very lucrative, very enticing, and they really went out and bought cars that really juiced sales over the summer, and people are expecting a slower market in the months to come.
President Trump made it clear that he was going to take this action when he took office. And quickly then, Governor Gavin Newsom essentially said California would counter and try to backfill these credits. I mean, what's the status of California's efforts at this point?
Yeah, that's absolutely right. That's what Governor Gavin Newsom promised. He said, as Trump was incoming, if this tax credit goes away, California will stand in and support the electric car market, which has been a very big priority for Governor Newsom. Well, guess what? That is not happening. Governor Newsom said, no, we can't do it. He recently told reporters that's not going to happen. The reason, pretty obvious. We've had some tough budget years, and the electric car market is big in California, and there's just not enough money to fill that gap, that $7,500 incentive for hundreds of thousands of cars every year.
The governor mentioned earlier this year, or actually this week, I should say, that 200,000 electric vehicle chargers, more than, are now available in California. That announcement, how much of an impact does that make on any of this?
Absolutely, that's a really impressive number, and it's interesting because I wrote a story about the electric car charging market last year. Analysts then told me we were going to need to see 1 million electric chargers by 2030, and that is just not likely to happen for some of the reasons we know. Infrastructure build out is difficult here in the state of California because of permitting issues, and it's also really expensive to do. So we're still a bit far from hitting our goal. That said, charging infrastructure is improving, and therefore we might not need as many.
All right. Alejandro Lasso with CalMatters. Thank you so much for being with us.
It was a real pleasure. Thank you.
Thank you. All right, well, next on California Politics 360, a celebration for two of the state's oldest national parks. Two of the state's oldest national parks are celebrating major birthdays. Sequoia and Yosemite National Parks are 135 years old. On September 25th, 1890, President Benjamin Harrison signed legislation to create the Sequoia National Park. The park was created to protect giant sequoia trees from logging. A few days later, Yosemite became a national park, the third in the United States. Thank you for joining us for this week's California Politics 360. See you next Sunday.